Okay, now let's look at week one again and the budget assignment and the fundamentals of the budget process. So if we look under week one, we're going down to understanding budget. That brings us here, and I have a sample P&L or profit and loss statement. That's what the P&L stands for, profit and loss. And I have an Excel sheet to explain. So this is a very basic, what we're looking at here is a very basic profit and loss statement or budget from a small enterprise. So when you first look at it, it may seem a little confusing. And what we're looking at is sales for the period of time and what the budget was. And then what's the variance? What's the difference from what actually happened to what was planned? So a little confusing at first if this is something you're not familiar with. So let's just simplify that. Let's look at a student budget. So one of you're planning on taking a vacation this summer, doing some traveling at the end of the semester. So your money, your income, your top line, you have a full-time job and you bring in $2,000. So the top line revenue is $2,000. So that's 100% of where your money comes from. So that's your sales, your revenue. That's the money that comes in. So we're thinking of you as a business. So if we were having a restaurant, this would be the restaurant sales that came from food sales or beverage sales, whatever we're selling. It could be a hardware store. It works the same way. So this is where your money comes in, and that represents the 100% of your revenue or your sales, your income. Whatever your cost of sales or cost of goods, well, you're going to have some food and groceries. And I'm going to say for this period of time, it's $450. So what's that as a percentage? 450 is the part of it that we're dividing by the total, which is 2,000. So 450 divided by 2,000 is equal to 22.5. This is actually the food cost triangle. The top number, the portion cost, or the portion of the money here, the portion of the sales that we're looking at is the food cost. So that's the top number. And then the total number is the 2,000 on the bottom, and we're looking for the percentage. So we're just using the food cost triangle to calculate this. So we want to know what percentage of our money that comes in as a student, as one of us, is spent on our groceries or food ingredients. So we kept track, it's $450. So again, 450 divided by 2,000 is 22.5%. So 22.5% of our money that we bring in from a paycheck goes to cover food. What about clothing? It's $125. How much is that as a percentage? 6.25%. Again, it's 125 divided by 2,000 is 6.25%. So this 29 is not the total of these or the sum or division or average, nothing like that. What this number is, these two added together, your expenses, 450 plus 125 equals 575. And your total revenue income is 2,000. So now it's 575 divided by 2,000 gives you 29%. This number is not related to these numbers. That's really important. Sometimes it works out, sometimes it doesn't. But what this number is this number, 575 divided by 2,000. So what do we have left over? 2,000 minus 575. We have $1,425 left over. So we've paid these costs. So now we have to look at some of our controllable expenses, our cell phone bill. You can decide to have data or not, so it's controllable. You're going to pay your cell phone bill, but how much it's going to be could depend on your long distance calls or your plan or things that you can manage. So our cell phone bill is $55. Our utilities for our apartment are $225. Again, they're controllable, right? We can turn the lights off or on. And our transportation is $150. So when you add those together, they add up to $430. So we had $1,425 after we took away our food and clothing. So now we subtract these controllable costs and we have $995. So our cell phone, what does the cell phone, what portion, what's the ratio of our cell phone bill to our revenue, our income? Well, it's $55 divided by 2,000. So 3% of the money we bring in, this individual is going for a cell phone bill. For the utilities, $225 divided by 2,000 is 11%. So 11% of the money that they're bringing in is going to pay for utilities. So now these three added together is 430. So remember, this number is nothing to do with these. This 22% comes from 430 divided by 2,000. So 430 divided by 2,000, 22%. So 22% of our money that comes in, the $2,000, is to pay our controllable expenses. So then we have non-controllable expenses or fixed expenses. So we could have rent. Our rent for our room or apartment is $800. So what portion of the money that we bring in goes to rent every 2 weeks? So if this was 2 weeks, obviously you're paying $1,600 a month. So if this is for 2 weeks, it's $800 divided by 2,000, and that's 40%. So 40% of our money every 2 weeks goes to pay our rent. Same thing with our bank fees or our insurance. We have to pay apartment insurance. So whatever the number is divided by the total of what comes in will tell you the percentage. So 1% of our money goes to pay our bank and other fees, and insurance is 5%. So these three added together are 910. 910 divided by 2,000, 46% of our money that comes in is to cover non-controllable or fixed expenses. What do we have left over? Well, it's 2,000 minus 575 is 1,425. 1,425 minus 430 is 995. 995 minus 910, we have $85 left over. So 85 divided by 2,000 is 4.25%. 4.25% is our net profit. Is that good or bad? It depends on what you think or what your plan was. It's just a number right now. But if your plan was 10%, then that's really bad. If your plan was 2%, well, then that's double what you had planned. So this number is only relative to what the original plan was, what you wanted to do. So this is the budget. This is what you're looking forward to. That's a budget. If this was after it happened, it would be a profit and loss statement. You're explaining where the money went and what actually happened. All right. So if you think through this, it's not a very complicated process. How much money do we bring in? What did we use it for? How much do we have left over? That's what a profit and loss statement or a budget is. Now, if you look at this and say, well, actually, this is me. I was going to travel this summer. I was going to go on a trip. $85. I need like $8,000. Well, 8,000 into 85 is how much? 8,000? That's 100. I have to work 100 of these shifts. That's times 2. That's 200 weeks I have to work. That's not happening. I might get down the street. Well, what could you do? Well, we need more top line sales. So what if we worked a part-time job for a while just so that we could save enough money to go on this trip? So now our revenue is 2,000 plus 500. It's 2,500. And if you think of an operation, a restaurant, this could be food and this could be beverage. So now it's $2,500. But look what happened. The net profit was $85. Now it's $585. Now our net profit is 23%. Why? Because it's not a perfect example, but we've already paid our rent. We've already paid our utilities. We've already paid our cell phone bill. We've already bought our clothing. Everything's paid for, right? For the first 2,000. So any extra money we make, we don't have to take any of that money to pay those things. So that's one way to look at it. Just to clarify, I know it's a simplified version, but a good way to think about how a restaurant operation works. So now if we look at a budget, a simple budget, it's the same sheet. It's the same process. So this tells a story. So the food, the revenue for this place, let's just say this is a small business for a year. Their food sales were $350,000 and their beverage, alcoholic beverage, were $55,000. So you add those together, that's $405,000. Well, what did they buy in groceries and use in groceries? They kept track of their invoices and they took inventory to figure out what they used is $110,000. Well, what's their food costs? What's their cost of ingredients as a percentage? This is dollars. And you need both numbers. Both numbers are important, both dollars and percentage. So it's 110 divided by the 350 because it's the food related to the food. So 110 divided by 350, that means our cost of goods was 31.59%. Our beverage, we sold $55,000, but we used $22,000 worth of beer, wine, and spirits because we sold it to our customers. So 22,373 divided by 55 is 40%. So what's our total cost of goods? 132,953. So we brought in 405. We used 132,953 to pay for the ingredients, the cost of goods. So what do we have left over? Our gross profit is 272. Now with that gross profit, we have to pay those controllable, non-controllable, and fixed expenses. So what do we got going on? We got salaries and wages. So salary could be a fixed amount that we pay our chef or our restaurant manager. And then we have wages, which are the hourly rate. If we kept track of that for this year, it's $161,000. And then our employee benefits, so they had medical and dental, we kept track of that, 24. And some other controllable expenses. Again, we talked about, this is a simplified example, but it could be things like utilities or advertising costs, printing costs. So we add that up, we get 215,000. So we had 272 gross profit. We take out the controllable expenses at 215 and we end up with 57,000, but we still have our fixed expenses, non-controllable. So our occupancy, our rent was 32,000. We have some interest on some loans, and we have some equipment depreciation. When you add those up, that adds up to $49,000. So $57,000 and subtract another 49, we end up with $7,731. What's that as a profit percent, net profit? This number divided by what we started with, 405, tells us it's 1.91%. So our net profit for this is 1.19%. So the process is the same whether you're an individual or a business. How much money came in, group it into where the money went, what it was used to pay for, and whatever's left over is profit. If there's no money left over, if it's a minus, that's a loss. That's why it's called a profit and loss statement, or profit or loss statement. Depends on which way you do. But a budget is your plan. So if this was your budget, you had planned. So if this was you calculating this for next year, you'd be saying at the end of the year, I want to be able to make 1.91% profit, $7,731, if that was your plan. Okay, so this is a basic simplified way to help you understand how budgeting works and getting comfortable with this concept of budgeting, because before we go any further, you really have to understand this. And that's what chapter 1 and 2 focus on.